In today's video, I'm going to share with you 3 reasons why I'm going overweight in this Yieldmax fund to start 2024, as the recent market pullback has provided a gift that most investors should be cherishing at this moment. So we earn over $150,000 per year in dividends at this channel, and my performance and value shows that we're beating the market to start the year. We're up almost 1%, whereas the S&P is down over 1%. So we're getting both dividends and capital gains at this channel to live the FIRE lifestyle, which is financially independent, retire early. And so can you. Email me for my e-guides at aikentod48@gmail.com if you need help doing the same. So for all newcomers at this channel, for every $1 you put in your account, you get $4 of purchasing power. I just use a fraction of this debt to get ahead. As you can see below, my debt is around $130,000, and my debt was a lot higher to start the year. And this is because the market's had a huge run up, so I've deleveraged a lot of my margins so that I can manage risk at the highs. But this debt of $130,000 won't show up on a credit check. It's low interest. I've negotiated it down twice. Many of my clients have done the same who bought my e-guides. My interest is around 6%. And you can click sell at any time, any of these funds, and your margin debt is gone. So the best part about the strategy is all of my dividends, the $150,000 in dividends, will pay back this margin debt in less than a year, and I'll be left with all these dividend-paying assets to myself, paying monthly cash flow for life. The dividends provide qualifying income for banks, for loans. That's how you really live the FIRE lifestyle here at this channel. Trading gains won't, Bitcoin gains won't, and statistically, traders lose 90% of the time. So you want to go with dividends in order to get ahead, and I just use some debt, a fraction of this debt to get ahead, like many of the greats that I know do. They use debt to get ahead. How did Elon Musk buy Twitter? He bought it with his margin debt. So I understand that margin debt is a great tool to get ahead, and I'm not going to use too much of it. You have to buy certain funds and certain stocks that makes sense when owning this kind of debt, okay? When carrying this kind of debt, you have to buy the right index funds and the right stocks. And the first thing you need to know about Yieldmax funds is that they're 50% maintenance at E-Trade. Maintenance is the whole secret to living the FIRE lifestyle, okay? I'm going to show you a maintenance tab of, let's say, a Tesla, okay? I'm not buying more Tesla at this moment. We've made a lot of videos about Tesla in the past, and that did really well for us. But today we're talking about another ETF from Yieldmax, and I'll share with you that ETF shortly. But look, 50% maintenance, okay? This is a problem when you're trying to live the FIRE lifestyle. When you have high maintenance names, it sucks up all of your equity. If you need help understanding maintenance, that's in my Volume 3 Margin E-Guide. So for every $100,000 I put into Yieldmax funds, 50 grand of my available withdrawal is taken up. And this is how you withstand not only margin calls, but you withdraw freely out of your brokerage account. Okay, you need to have a high available withdrawal number. Okay, my net account value is 482, but my available withdrawal is 218. This means that I can withdraw from my E-Trade account whenever I want. I can add to my margin debt whenever I want, but I have to keep this number high because if it gets to 0, you're in a margin call. So I can withstand over a 30% correction in the markets, I say, to all newcomers at this channel, because if you take my account value of 482 plus my 130 in debt, call it 600,000, then 10% of 600,000 is 60,000, 20% is 120, 30% would be 180. So a 30% drop in the market, I would still have over 40 grand, let's say about 40 grand of available withdrawal left at my disposal, where I can not only keep living the FIRE lifestyle, even if the market's going down, but I can withdraw out of my account. But even if you're not using margin, you need to have high available withdrawal numbers, and maintenance is the secret to that. And again, Yieldmax names are 50% maintenance at E-Trade. You can go to other brokers who have lower maintenance, but they might not have the special drip for Cornerstone. Cornerstone is where I anchor most of my money in my portfolio. As you can see, I have about 400 grand in Cornerstone, because it's a 4-star fund, and Cornerstone gives you the growth that Yieldmax funds can't provide, okay? Yieldmax funds, their upside is capped because they sell covered calls, synthetic calls, and also their dividends fluctuate. Cornerstone's dividends are set for the year. The 21% dividend is set for the year, and it drips its 21% dividend down at the net asset value, which is very special. No other fund does this that I know of that's indexed to the S&P. So please turn on those special drips for Cornerstone if you own Cornerstone. But if you're in a Robinhood or an Interactive Brokers, they do not carry the special drip. So just keep that in mind, that you want to own Cornerstone as a diversification tool to Yieldmax funds. They have lower maintenance as well and a steady dividend. And with Yieldmax, you want to put less concentration in those stocks because they're stock-based. They have headline risk. I put all my money in the indexes like Cornerstone and Defiance because they not only give me compounding power and I can make more money with this much money concentrated behind a position. I can make more money with compounding ability in these ETFs and these index funds. And I shield my account from unwanted volatility because index funds move down less than stocks. Okay, I use Cornerstone for the capital gains. I use Defiance funds for the excessive dividends, but no capital gains. And I use Yieldmax for a combination of capital gains and dividends. But I don't bank on the capital gains side for Yieldmax. I mainly am in it for the dividend because if we buy the stock and it falls, no matter what happens with the stock, the dividend will cash flow it over time. In Cornerstone's case, the dividend will be cash flowed in 5 years because 20% dividend times 5 years, you double your money after that. And then after that, you're playing with house money. Everything else is free money after that. And with Yieldmax funds, you can double your investment in a shorter amount of time. Coney has 100% dividend almost. Tesla has a really high dividend too. So you can cash flow your investments in a lot quicker amount of time with Yieldmax funds, but you don't want to put too much money in them because they are stock specific. Now, the only Yieldmax fund that's low maintenance is Microsoft. Okay, this is the one that's 30% maintenance. And this is why I put so much money in Microsoft, okay, 30% maintenance. Okay, not only is Microsoft 30% maintenance and it's a top quality fund, but Microsoft is a large percentage of the indexes. Microsoft, as you can see here on this Zacks website, Microsoft is almost 7% of the index. Okay, it's the second largest holding of the S&P. But what else do you notice is a large holding of the S&P? Well, Apple is, okay, and that's 7% weighting. And lo and behold, Apple has had a pullback of a lifetime, in my opinion, that most investors should be taking advantage of. Okay, if we go to a chart of Apple, okay, this is what I wanted to show you. This is what was so compelling about Apple to me. Okay, Apple's had a pullback, and I played Apple wrong in 2023. Okay, I played Apple wrong. I put too much in this position. Even though I was still underweight, technically speaking, from an index perspective, I put too much in this when I should have been concentrating most of my money in the funds, but into ETFs and diversified funds. But I told myself that if Apple had a pullback back to its 200-day moving average, I was going to rebuy Apple hand over fist, and I was going to get my position back up to about 10,000. Also, if and when Apple rises back to about 200 a share, then the dividends will be higher as the volatility rises. So you're getting a chance to buy Apple now here down low where you can buy more shares. And then I'm hoping for a dividend increase as the share price moves higher and the premiums move higher. So Apple was very compelling for that reason, okay? It's a large part of the indexes and it's pulled back to its 200-day moving average, the black line, okay? And its RSI is getting oversold. So this is where you want to come in and buy Apple if you've been waiting to buy it on a dip. Okay, most fund managers have Apple in their portfolios, a large percentage of the indexes. So you should see people swoop in and buy on this 200-day moving average. If you need help understanding technicals, that's in my Volume 2 e-guide. Okay, so now you see why I'm adding more to Apple. Okay, it's 50% maintenance though, so I can't put too much in it. I have 7,000 in it now, and my cost position is, as you can see, we're down 6% in our cost position. This is also because we had the ex-dividend date last week, which dropped all of our Yieldmax stocks by the amount of those dividends. So we're not really doing as bad as it looks here. Coney, for example, we were up 50% in that not too long ago, but the dividend drops the stock by that amount. So you really can't be in these stocks for the gains. You have to take the gains when you have them. Like I had in Coney, I was trimming Coney, I was trimming Tesla, and so I trim the gains and I rebalance around the lows, and Apple is no different. Okay, Apple, now I'm reloading around these lows. Okay, I'm rebalancing along the lows of the 200-day moving average, and I plan to get this up to 10,000 as that would still be underweight in my portfolio compared to what Apple is in the indexes. So this is how I outperform the market, guys, okay? I buy the indexes, I make sure that they're low maintenance names, and if I buy a name like Apple, I make sure that it's cheap on its chart, and I make sure to keep the allocation in Apple small so that it doesn't take me down. You never want any one stock to take you down. I use a combination of closed-end funds like Cornerstone and GOF. These are both highly rated, but you have to play these funds properly, time them around their rights offerings. Closed-end funds have rights offerings almost every year, and you have to not only time them around the rights offerings, but you need to turn on that special drip for Cornerstone. If you need help playing Cornerstone, that's in my Volume 4 e-guide. When you buy my e-guide, you get free access to the Discord chat room for life, where I provide you with the rights offering alert to Cornerstone and my portfolio when I'm not making videos on YouTube. We also have a Yieldmax channel there, a Bitcoin channel, you name it, okay? If you need to know who has the special drip for Cornerstone, you can find out at that Discord chat room, because not every brokerage has the special drip for Cornerstone. The other tool I combine with Cornerstone to get ahead of the market is Defiance. These give me my extravagant dividend yields, but no capital gains. And then Yieldmax give me a combination of capital gains and dividends, but you need to be aware that the capital gains are fleeting as erosion is high in these funds. You need to be playing it for the dividends. Just make sure that you manage your position sizes accordingly in these Yieldmax funds, because you don't want your portfolio to drop by the amount of stocks. You want them to drop by the amount of the indexes, as the indexes fall by much less amounts than stocks. Okay, if you need help doing what I'm doing, email me for my e-guides at aikentod48@gmail.com. When you buy all of my e-guides, you get free access to the Discord chat room and my phone number for life, so just keep that in mind. And if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.